Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering when the FTB can intercept a taxpayer's refund. Spiedel's 2025 post-tax season update and review webinar is a perfect mid-year update where we'll cover upcoming tax legislation, the IRS's latest guidance on claiming theft losses, navigating IRS appeals during staffing cutbacks, and more. See a full list of topics and register at caltax.com. The FTB participates in the State Interagency Intercept Collection Program, which requires the FTB to redirect part or all of the taxpayer's state tax refund to pay a balance due to another government agency. For example, debts for parking citations, tolls, tuition, and various fines. The FTB also participates in the Federal Treasury Offset Program and may intercept a federal refund to pay a state tax debt. If the FTB takes a portion of a taxpayer's refund to satisfy another agency's debt, they'll send the taxpayer a notice explaining how much was taken and by which agency. If your client disputes the other agency's liability, they need to contact that agency listed on the notice, not the FTB. Refunds may be offset for debts owed to other agencies only after all existing FTB tax debts have been satisfied. Any FTB tax refund is used first to pay use tax reported on the FTB return, then any prior year's FTB taxes. If a taxpayer owes more than one agency, there's an order of priority that determines who gets paid first. Any leftover amount is refunded to the taxpayer. If there are multiple identical priority accounts, then funds are directed to the account with the largest liability. The priority is delinquent child or family support cases enforced by a local child support agency, delinquent child or family support cases enforced by someone other than a local child support agency, delinquent spousal support cases enforced by a local child support agency, delinquent spousal support cases enforced by someone other than a local child support agency, amounts due to the Victims' Compensation and Government Claims Board, IRS debts, and then overpayments of unemployment benefits. The Multi-State Offset Program authorizes the FTB to enter into reciprocal collection agreements with other states to offset refunds to satisfy the delinquent income tax debts of the other state. Currently, the FTB has agreements with Connecticut, New Jersey, and New York. Taxpayers will receive a notice if the FTB intercepts their federal tax refund. Taxpayers have 60 days to pay their state tax liability to avoid the offset. Payments can be made online via the FTB's webpay. Even if a taxpayer has an offer and compromise plan in place or is making installment payments, the FTB may still offset the federal refund in addition to any state tax refund until the outstanding tax debt is paid. The controller is prohibited from offsetting delinquent accounts against the personal income tax refunds of an individual who received the California Earned Income Tax Credit or the Young Child Tax Credit for that taxable year. These provisions do not apply to delinquent accounts for the non-payment of child or family support. Spiedel's analysis and explanation of California taxes is the most complete and best-priced California tax guide available, and it includes periodic updates for major changes that happen during the year. You can order the 2025 edition at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.